Hey guys, welcome to Crypto Mumbles, where we talk about everything crypto. My name is Peng, and thanks for joining in. So today I'll be talking about a stablecoin protocol. So as we know, stablecoins grew exponentially in 2021 with the boom of the crypto market. Stablecoins grew 450% to approximately 156 billion in 2021 from 2020. And the 8 largest stablecoins had a total market value of 152 billion as of December 13, 2021. So it is natural for you to be bullish on stablecoins if you're bullish on the crypto market or crypto as a whole, because stablecoins provide sort of a safe haven for crypto traders that don't want to be holding any assets and they just want to hold something that is stable, as the name mentions, right? And if you want Web3, you want decentralized Web3, you want decentralized metaverse, decentralized rendering, etc., then you need to have decentralized stablecoins. Your stablecoins cannot be backed by the US dollar, right? And also the SEC is coming down on collateralized stablecoins, collateralized by USD. So there is that as well. And so if you're bullish on stablecoins, how can you actually earn from that bullishness or earn from that fact? Because buying stablecoins doesn't really net you investment profits, right? A stablecoin $1 today will be $1 tomorrow, $1 5 years down, $1 10 years down. So this is where it gets interesting. So introducing BEANstalk. So BEANstalk is a decentralized credit-based stablecoin protocol. It uses credit instead of collateral to create price stability relative to a non-blockchain native asset. So BEANstalk aims to tackle the requirement of collateralization and centralization of current stablecoin protocols. It relies on 3 interconnected parts. Number 1, a decentralized price oracle. Number 2, a decentralized governance mechanism, which is called the silo. And number 3, a decentralized credit facility, or which we call the field. You can imagine the entire BEANstalk protocol as a farm, like a proper farm where you're farming like beans. So you have the silo, you have the field where you plant the beans, right? So for number 1, the decentralized price oracle. So in order to maintain beans one-to-one pegged with the USD, the protocol uses 2 Uniswap liquidity pools, USDC ETH and BEAN ETH, to maintain the dollar peg. So when the ratio of these 2 pools are equal, then BEAN is deemed to have maintained the peg, or is on peg. Number 2, the silo. The silo is a DAO that acts as the governance mechanism of BEANstalk. Pretty standard stuff. The field is where lending takes place. So in the field you have soil, right? Soil. So soil is the pre-approved number of beans that can be lent to the BEANstalk. So anytime BEANstalk is willing to issue debt, there will be soil in the field. Any beans not in the silo can be lent to BEANstalk for pots, in exchange for pots. And pots are BEANstalk's native debt assets. So let me go through the tokens one by one. So we have BEAN. BEAN is the stable coin, as we know. Then we have STALK, STALK, STALK. So STALK is a governance token. It allows token holders to decide on changes in the protocol. Right, as usual, standard stuff. Seeds. Seeds is a utility token, right? It yields 1 over 10,000 of a stock every season. So it's basically like a passive stock grower. And then lastly, we have POTS. POTS, as mentioned, is BEANstalk's native debt asset. It is given in exchange for lending the protocol BEAN, or the stablecoin, and it can be redeemed upon maturity. You can think of it as similar to a zero coupon bond, right? Where you lend money, you are given the zero coupon bond, and you can redeem it upon maturity. So BEAN has an elastic supply. The asset does not have a fixed total supply, which is what makes it interesting. So now we're going to talk about the mechanics behind BEAN. So whenever BEAN increases higher than the peg, so when it's above $1, the protocol means bean, which increases the supply while simultaneously lowering the interest rate. So when we increase supply, we dilute circulating supply, right? And we lower the price, which is intended, and they lower the interest rate so that people won't want to loan the silo any beans and keep holding the beans to maintain circulating supply. And when bean falls below the peg, the protocol increases the soil available. So remember that soil is the pre-approved number of beans that can be lent to the protocol. So when soil is increased, means more people can lend more beans, and they also raise interest rates, which makes it attractive for investors or holders to lend their beans to the protocol to reduce circulating supply. And the interesting thing is, this entire process of lending to the silo is on a first come first served basis. So this actually incentivizes holders or investors to quickly lend beans to the silo or to the protocol to quickly reduce circulating supply. Because it's first in, first out principle, if you are the first to lend the money in, you will be the first to get your rewards out. And you'll be given pots in exchange, right? As sort of the token or the zero coupon bond as mentioned. So the first in, first out sort of principle makes things efficient and helps bean to maintain the peg quickly, because investors would rush in to loan the silo. So here's the interesting part. So you can actually stake bean. You can stake bean and earn stock, right? And stock is the governance token. And what stock actually does is it entitles you to bean rewards when supply increases. So I'm going to repeat that, okay? So you can stake bean and earn stock. And what stock does is it entitles you to bean rewards when supply increases. So as shared previously, bean has no supply cap. It can mint an infinite amount of supply, right? As let's say a crypto market takes off, stablecoin demand increases, then let's say bean is a popular stablecoin, and the demand for bean will continually increase also. If everyone is buying bean and the demand for bean increases, then the price goes above peg, then it means more to reduce peg. So stock entitles you to collect bean rewards when supply increases, which means you can buy $100 worth of beans today, $100, which is 100 beans, right? You stake it, and then let's say 20 years later, the crypto market boomed, stablecoins boomed, and let's say that BEANstalk as a protocol boomed as well. The demand for bean boomed, they minted like a lot more supply. You are actually entitled to collect the supply as rewards. So your $100 stablecoin could actually net you returns like $200, $300, etc., right? The rates are not reflective of the current rates or anything, it's just an example. But the fact that you can actually buy into a stablecoin protocol and earn, which is pretty amazing, because stablecoins are viewed as safe assets, right? Assets that are stable, that they don't fluctuate, but in that sense you cannot earn from it as well. But now they are allowing you to earn from buying and staking a stablecoin, which I think is very, very interesting. And I think that this narrative will hit eventually when BEANstalk has figured things out and worked its, little kinks and bugs here and there. So what's the current issue with BEANstalk now is that, as we're speaking, BEANstalk is about over $600 million in debt, right? With only about 50 million in equity, because they keep trying to maintain the peg, right? So needing to maintain the peg when the peg is down, the protocol buys in a lot of circulating supply and issuing pots, and so they are in a huge debt towards the investors that lend the protocol the money. And as of now, there is no actionable or sustainable measure that I can see that would help the protocol reduce the debt. But why did I want to share this protocol, BEANstalk, this entire idea, is because I'm pretty sure that this narrative will hit and be very popular in the future. Maybe give it a few years, or maybe just 1 year. Maybe it might not be BEANstalk. BEANstalk might fail halfway through and just shut down, and another protocol pops up and improves on BEANstalk and fixes the issues that BEANstalk faces, which is the debt issue, right? Issuing so much debt to maintain peg, but how can they repay back the debt, which is a huge question mark right now. But once the issues are fixed, I feel that this can be a narrative that will let you earn huge bucks. Because if you're bullish on the crypto market, naturally you're bullish on stablecoins. And I would say that stablecoins feel the most impact when the crypto market pumps, or when crypto adoption increases. Out of the many digital assets, Bitcoin, Ethereum, Phantom, etc. Yes, you can argue that yes, adoption will increase on all these chains as well. But what will get adopted even more is stablecoins, because stablecoins is a medium, right? It's a medium for traders and investors to buy their digital assets. And if they choose to risk off, take profits or whatever, they want to park some funds but don't want to buy in yet, it's stablecoins. And in the future, when we move to a decentralized metaverse, etc., we need decentralized stablecoins. And that's where I think these concepts will come in. So if you're bullish crypto, you should be naturally bullish stablecoins. And by buying into a stablecoin protocol like that allows you to earn from holding and staking, it only makes sense. Yeah, so this is a very simple sharing of an idea, a protocol, just for your knowledge. And the BEANstalk team is actually working very hard. They've been making a lot of developments since I first found them. And I think that maybe BEANstalk might be it, if they can solve the debt issue. So they have opened new features such as the farmers market. So farmers market is where you can trade pots. So as mentioned, recapping, pots, they are like zero coupon bonds. They are the native debt asset of BEANstalk. BEANstalk, they represent the amount of money that BEANstalk owes you, right, with interest. So you can actually trade these pots and possibly use them as collateral of some sort. I think in that sense, maybe if on the farmers market people trade pots and BEANstalk takes a percentage fee off the market, then maybe they have some sort of revenue to try to cover the debt that they are facing right now. But maybe, just maybe, things are still in development. I would say it's still very early, still a young protocol. They only launched in August 2021, quite recent, I would say. But generally, it's the idea that I was interested in sharing about. As usual, not financial advice. Do your own research, and I hope you enjoyed this sharing. Cheers, everyone. Hope you guys enjoyed this episode of Crypto Mumbles. Be sure to follow our Telegram channel at Crypto Mumbles and YouTube as well. So see you in the next episode. Take care.